Hey everyone, welcome back to Corporate Decoder, the place where we decode the world of business and finance. Today we have a really interesting peek into two unique ETFs, one that follows Democratic politicians trading and another that follows Republican politicians trading. You had me at politician trading, didn't you? This is their annual shareholder report for the period ending the 30th of September 2025. So let's dive in and see if these ETFs are trading like they're actually walking the walk. Before we jump into the numbers, if you are new here and appreciate getting the real story behind corporate filings without all the jargon, make sure you hit that subscribe button. And hey, we've got a fantastic community gathering on Discord. Lots of great conversations happening there. Link is in the description below. First up, let's talk about the unusual Wales Subversive Democratic Trading ETF. Ticker NANK. This report tells us about the fund's performance from the 1st of October 2024 to the 30th of September 2025. Now, let's get to the juicy stuff, the performance for the past year. Hypothetical $10,000 investment in the Democratic Trading ETF returned a solid 20.04%. That is pretty good, especially when you compare it to the S&P 500 index, which returned 17.60% over the same year. And looking at the long haul, since its inception on the 6th of February 2023, this ETF has really outperformed, returning a stunning 25.17% annually. The S&P 500 in comparison returned 21.96% annually since then. That is a significant outperformance for a strategy that is trying to track the trading habits of politicians. So what drove this success? The report says the fund was heavily weighted towards growth and large cap stocks, with a leaning towards technology, communications, and healthcare, and an underweight in financials and industrials compared to the S&P 500. It was pretty much all about mega cap tech, with about 94% of the portfolio in large cap stocks. Big names like Nvidia making up about 10% of the portfolio, and Microsoft at nearly 8% were major drivers. Artivion also contributed nicely. It seems following these congressional trades paid off when these big tech companies were doing well. On the flip side, companies like JP Morgan Chase & Company, Walmart Incorporated, and Sweetgreen Incorporated acted as headwinds. Not every trade is a winner, of course. As of the 30th of September 2025, this fund is pretty substantial, worth about $255 million. It holds 150 different companies for investors. Looking at where the money is, technology hardware and semiconductors is a big chunk at 20.7%, followed closely by software and tech services at 19.8%. Media is also a significant player at 12.8% and healthcare at 11.8%. And the biggest holdings really show that tech focus. Nvidia Corporation takes the top spot at 10.4%, followed by Microsoft Corporation at 7.9%, Alphabet Incorporated Class C at 4.9%, Amazon.com Incorporated at 4.8%, and Apple Incorporated at 4.0%. Now, an interesting detail here is that this fund adopted the performance of a predecessor fund due to a reorganization. This means all the historical performance data we just looked at actually belongs to the unusual Wales Subversive Democratic Trading ETF before it was merged into this new structure in December 2024. Alright, let's switch gears and look at its counterpart, the unusual Wales Subversive Republican Trading ETF, ticker GOP. This ETF tracks the trading activity of Republican members of Congress. For the fiscal year ended the 30th of September 2025, the GOP ETF returned 16.65%. This is a bit less than the S&P 500's 17.60% for the same period. And when we look since its inception on the 6th of February 2023, it has averaged 15.91% annually. Again, lagging behind the S&P 500's 21.96%. The report explains that this fund skewed more towards value stocks, with overweights in financials, industrials, and energy, and underweights in technology and healthcare relative to the S&P 500. A notable part of its strategy also included a 4.7% holding in the iShares Bitcoin Trust ETF. The biggest contributor was Comfort Systems USA Incorporated, which held about 3.73%. JPM Chase & Company and the iShares Bitcoin Trust ETF also made meaningful contributions. On the downside, companies like Bath & Body Works Incorporated, Inside Enterprises Incorporated, and ASML Holdings NV acted as headwinds for performance. This fund is smaller than its Democratic counterpart. As of the 30th of September 2025, it is valued at about $59 million and holds 141 different companies. The sector breakdown here is quite different. Tech, hardware, and semiconductors is at 14.8%, software and tech services at 8.7%, industrial products at 8.2%, and industrial services at 7.7%. Notably, oil and gas is a more significant holding at 7.2%, and financial services is at 7.2%. Leading the pack here is Comfort Systems USA Incorporated at 5.3%, followed by JPM Morgan Chase and Company at 4.9%, and the iShares Bitcoin Trust ETF at 4.7%. Nvidia Corporation is also in the top 10, but at a smaller percentage than in the Democratic ETF. Similar to the Democratic ETF, the Republican ETF also underwent a reorganization on the 30th of December 2024, adopting the performance of its predecessor fund. It also changed its ticker symbol from Cruise to GOP during this reporting period. Now let's dig into the actual holdings, starting with the Democratic ETF. In banking, we see a lot of the big names like Wells Fargo and Company, JP Morgan Chase and Company, and Bank of America Corporation. For consumer staples, Philip Morris International Incorporated is a significant holding. The healthcare sector is quite diversified with substantial positions in companies like Artivion Incorporated, Eli Lilly and Company, and United Health Group Incorporated. Media is a big focus. Alphabet Incorporated Class C is a major holding, along with Meta Platforms Incorporated Class A and Netflix Incorporated. And of course, the tech hardware and semiconductors sector, which is the largest, features heavily. Nvidia Corporation is a massive holding here, as are Apple Incorporated, Broadcom Incorporated, and Applied Materials Incorporated. Now, turning to the Republican ETF's holdings, the banking sector here also includes major players like JPM Morgan Chase and Company. The oil and gas sector shows significant positions in Chevron Corporation and ConocoPhillips. Financial services include companies like BlackRock Incorporated and Visa Incorporated Class A. And in tech hardware and semiconductors, Nevada Edia Corporation is still a notable holding alongside Intel Corporation and Apple Incorporated. A standout here is the significant stake in the iShares Bitcoin Trust ETF, representing 4.7% of the fund's assets, which reflects a different strategic emphasis compared to the Democratic ETF. Looking at the financials for the Democratic Trading ETF, net assets are around $255 million paid, and capital is about $210 million, with total distributable earnings around $44 million. For the year ended the 30th of September 2025, the Democratic Trading ETF saw a net investment income of about $474,000, but the big story is the net realized and unrealized gains, totaling over $36 million, leading to a net increase in net assets from operations of over $36 million. It is clear from the statements of changes in net assets that there were substantial capital inflows, with subscriptions around $67 million for the Democratic ETF. The financial highlights for the Democratic ETF show a total return of 20.04% for the year ended the 30th of September 2025. The ratio of expenses to average net assets is 0.73%. For the Republican Trading ETF, the total return for the same period was 16.65%. The expense ratio here is also 0.73%. A key difference is the portfolio turnover rate, which is 16% for the Republican ETF compared to 10% for the Democratic one. So what does this all mean? These ETFs are designed to capitalize on the trading activities of politicians. The idea is that by observing what politicians are buying and selling, investors can gain an edge. This report confirms that the Democratic ETF has significantly outperformed its Republican counterpart and the broader S&P 500 over the past year and since inception. There are, of course, risks. The report highlights Democratic Party investing risk and Republican Party investing risk, noting that the focus on specific sectors based on committees might make the funds more volatile. There is also a general market risk, and importantly, an Ethics in Government Act risk, which points out the potential legal issues if the data used is deemed to be for a prohibited commercial purpose. They also mention a reporting delay risk, meaning the funds might not trade at the exact same time as the politicians, potentially impacting returns. The management fee is 0.72%, which is paid to Tidal Investments LLC, the advisor. This fee covers most of the fund's expenses. It's interesting that Tidal Investments LLC then pays a portion of any remaining profit from this fee to Subversive Capital Advisor LLC. The auditors, Cohen and Company Ltd, confirmed that the financial statements present fairly the financial position of both funds. This is a standard part of these filings, giving investors some assurance about the numbers. Now, let's talk about what we think of these results. The Democratic ETF is the clear winner here. It has not only outperformed the S&P 500, but also its Republican counterpart by a significant margin. This suggests that, at least for this period, the trading patterns of Democratic politicians have been more profitable. The heavy concentration in big tech stocks, particularly Nvidia and Microsoft, clearly paid off. The Republican ETF's performance, while not terrible, lagged behind, and its inclusion of iShares Bitcoin Trust ETF shows a different strategy, which saw some positive contribution but also headwinds in other areas. The risks mentioned are significant. The reliance on politician trading data could become a legal minefield. And while outperforming the market is great, the concentrated nature of these ETFs means they could be more volatile than a diversified index fund if those specific sectors or companies face significant downturns. Our take is that while the idea is novel and the Democratic ETF has proven successful in this reporting period, investors should be aware of the inherent risks. It's a strategy that's highly dependent on the specific trades being made by a relatively small group of people, and past performance, as the report itself states, is not a guarantee of future results. The Republican ETF needs to find a better strategy to overcome its performance gap. Alright, that is our breakdown of these unique ETF filings. What do you think about this whole concept of trading based on politicians' portfolios? Do you think it is a smart strategy or too risky? Let us know your thoughts down in the comments below. If you found this analysis helpful, please give this video a thumbs up. It really helps the channel grow, and of course subscribe for more deep dives into corporate filings. Don't forget to join the conversation on our Discord server. Link is in the description. Thanks for watching, and we'll see you in the next one.